I hope you're having a wonderful week and thanks for tuning in. If you're thinking about buying or selling a home soon, you probably want to know what you can expect from the housing market this year. After all, in 2022, the market underwent a major shift as economic uncertainty and higher mortgage rates reduced buyer demand and moderated home prices. So today we're talking about the predictions for the 2023 real estate market. The biggest question right now is, what do we think will happen to interest rates? We saw rates go above 7% in October, and that was the highest they've been in almost 2 decades. But they've since come down, and a lot of economists are saying we've seen the worst of it. And I am with the economists on this one. I think rates will go down to the mid or low fives by the end of 2023, and here's why. The 30-year fixed mortgage rate is closely linked to the 10-year Treasury bond. It's not one for one, but typically when the 10-year Treasury goes up, mortgage rates go up, and when the Treasury comes down, rates come down. The 30-year fixed rate mortgage has traditionally averaged 1.7% higher than the 10-year Treasury yield. But back in October, we saw the biggest spread between the two metrics we've seen in a while, 2.8%. But both the Treasury bond and mortgage rates have come down since, and if the spread were to normalize back to the historical average, we would be looking at a mortgage rate in the mid-fives sometime in 2023. Now, don't get this confused with the short-term benchmark rate, which the Feds have said they want to keep raising, but the short-term rate is not directly linked to mortgage rates. So, would a rate in the fives be considered good? Frankly, yes. Rates in the 5 to 6 range are honestly quite healthy as they help control the market. When we had rates in the 2s and 3s, the market was out of control, overheated, and with demand like that, it's not sustainable to be competing with dozens of offers to buy a house. A lot of people either ended up overpaying or with buyer's remorse because they got caught up in the frenzy. But today, there is a lot less competition. You can be more discerning. You can actually buy the house you want, and then you can refinance when rates do come down. Okay, so that's on rates. Now, what about the market? Will 2023 be a buyer's market or a seller's market? Realistically, neither. Currently, there is a slight seller's advantage for sellers who price correctly, and there's a slight buyer's advantage on overpriced properties. So there's opportunity for both sides right now. And we still have relatively low inventory and relatively low days on market. If we do get more inventory and rates don't come down, we will see more of a buyer's market, but we're just not there. So values are remaining stable and will probably plateau for the rest of this year. And our supply is so heavily influenced by interest rates. Just think about it. People who locked in a 3% rate during the pandemic have no incentive to sell and pay double their rate on a new house unless they really need to move. So until rates come down, we won't see as much movement and inventory will continue to stay low. The only exception may be investors who don't have the emotional attachment, and if the ROI makes sense, they might not mind offloading some properties. It's going to be an interesting first quarter as we move out of the holiday lull and into the spring market. Make sure to stay tuned for more real estate updates and let me know if there's anything I can help with in the meantime.